Good evening, everybody. Hope you're doing well. Let's get into the daily market recap, starting with a couple playbook trades from the session. So Tesla, a little bit of a technical trade. So not, I wouldn't say the easiest to spot, but just given the momentum that we've seen in Tesla over the last week or so, you could have caught a decent turn here today, just taking advantage of the momentum within the range. So there's been a lot of relative strength. Obviously, yesterday was a big down day. This just became a slippery slope. When you look at the higher time frame, we made new all-time highs, trapped that high yesterday, and then sold. But we ended up defending the breakout lows. So the daily bar is actually technically held, even though this is a pretty dramatic candle. And then going into today, we gap up with CPI. And once we defended dips, at this point, it's essentially, you can kind of ask the question, like, where are you going to go? Like, where's Tesla going to go when it's had this much momentum? And that's the way I would be thinking about this. We were watching this 482 spot, which is a pivot from this day here, which we did have on the watch list today. I didn't participate in this. I was focused on MU, which we'll talk about next. But many of you did end up catching this, which was good to see. So you have a first move down, or really first move up that trapped the pre-market highs, but this turn. So once we started to turn and dips started to hold with higher lows, you could take this with reasonable confidence that you could at least rotate back up to the next area of resistance, which is this area here on 486 first, and then that 491, which is that high that was put in. So I thought that was pretty good. Maybe not the simplest idea, but did work out pretty good today. So congrats if you caught that. MU actually created multiple opportunities today. This was a good example of a stock that, or for those that are interested in scalping especially, that once it's in play, it can create more than one setup, right? So I'll start with the opening drive as far as review and just stepping back. Really strong earnings report. The AI tech trade has been under some pressure, as you can see, is started to pull back a bit and some profit taking across the board within this space. And then we have a really good report and big gap up that puts the stock right back to the highs. So these highs were being tested in the pre-market. We talked about the opening drive and how the RSI was a bit extended on the 30 and the hourly, right? So this made the opening drive a little bit harder, but right before the open, we did get a little bit of a cool off, which gave me some confidence to at least try the opening drive. In particular, when you look at the 15-minute here, you can see that we did kind of pull back a little bit on the RSI, which just means that if you see some kind of defined entry or sweep and turn, that can be really, really powerful for a squeeze play. And you have this all-time high at 264.75. So I think this was very valid to try, but it's in that aggressive category of opening drives, which we fully prepped for in the pre-market. So once I saw this turn, right, going down, you could even go down to the 2-minute with this, look here. We had this kind of hesitation at the open, and then this aggressive turn. That's where I got long, because your risk reward here is just so good, right? And knowing that we dipped a little bit, the RSI has reset a little bit. And if this would have taken out the highs, it was looking really aggressive. I was actually pretty confident in this, that this could trend all day and close on the highs, especially if the market cooperated, which it ended up just chopping around and kind of failing at 6,800. So this is a good example of where you have a thesis, big picture variables, you see what can happen, the price starts to validate that, and then it just doesn't work. And it's as simple as that. And this is a good example of why you have to follow your plan. So, you can see how aggressive price was here, and that's why I had confidence in that. So this was ultimately really good. The opening drive paid pretty well. We were up about $1,000 on the small account challenge on this move here. And then once we pulled back into here, I was looking at a lot of times, MU is a very trappy name. Okay. So to me, I was thinking, with the market attempting to squeeze back higher before, we ended up chopping around, this was an attempt to kind of trap and turn this kind of opening area. And so to me, I was willing to take a shot at that since we had some profits. And I did hold past the stop a little bit. So I just want to be, objectively clear with you all on that. The reason I made that decision, whether it was a good one or not, was just because I was risking break even. So I had profits to work with. Whether that's valid or not, I could argue that with myself. But I managed the risk at the end of the day, and that's what matters most. I didn't lose any money with that, but did give back profits from the opening drive. And objectively here, once you fail this opening low, this becomes a fade. So this is why I put on the recap for tonight that the fade trade was valid. So once you see this fail to put that in, then the opposite becomes true, and you can actually take this to the downside as buyers just kind of get pushed, out of the way, right? And then that allows for the hourly and the 30 to really more truly reset, which you can see it did. All right, so that was my thoughts on that. And then as far as the next trade, so the market started to look a lot better. Okay, and so once we started to turn back up here to 250, 252, 253 area, this is where I started stalking that. It's kind of like called a John, or people call it different things, but you'd have your first move up like this. It could even be like considered an ABCD pattern, right? Where you start to, you first move up, you fail the low, take that out, and then put in a higher low and start to turn higher. The best ones will end up trending all day and close on the highs, which this got really, really close to looking great. We actually sold our last one here, but let's get to the entry. So once I saw this start to turn, to me, then the risk reward became a bit better. So I was maybe a little early. It probably would have been better, in hindsight, to wait a little bit to see how the next dip reacted. But given the way the market looked, I was not wanting to miss out on what could happen with MU today, just given the bigger picture variables. So the reason I had a stronger bias was because of how good the report was and how tough the AI tech trade has been. That my thought process was, if this starts to go, it can really shift the tone and sentiment in that trade, in that sector, and therefore can not only just break out, but really run through the highs. That didn't happen, but if it would have happened, I would have been sized for it, right? And my confidence was there. And then you saw how I managed it regardless of my bias and thesis on the trade. I took some profits along the way, and then on this move, end up scaling out of everything, with the last fraction being sold here. And then on a little dip, I added a roll up, which is, looks like that probably will expire worthless, but only risking maybe 20% of the total profit. So this is multiple opportunities within the same stock today. I thought it was okay. It was routine. It was nothing incredible. But it just goes to show you that when something is in play, there can be multiple opportunities to trade. And we caught, the opening drive, and then this intraday pattern, missed the fade, but that was also good. Okay. So Lulu was another playbook trade today. I thought was pretty darn good later in the session. So this is a great example for those that, maybe a little bit newer to the playbook, of a give and go that fails and turns into a fade. Okay. So give and goes are when you get, a first move down. This is technically, stretching that. If you go to the 5, usually give and go, you don't want any move up, but the fact that this did move up and reject 226 even further gives you more confidence with the fade, actually. So a true give and go, you want an open like this, where it's straight down and then consolidates and turns. Okay, so the fact that there was a first move up is a minor nuance that actually makes it even more qualified for a fade trade. But what I wanted to get to with a typical give and go is, once you've established a turn, if that turn fails, it's totally fine, in my opinion, to take the turn, right? And we called this out, like, this is a nice turn here, right? I end up calling this out on stream to I want to see how the next dip reacts, just because this nuance I didn't particularly love, and the market was a little bit wonky, right? So I was just okay. I would have been okay missing this if it just ripped through 226, or you could even trade it above 226. Okay, but the point I want to make here is that when a give and go or a turn is established and then fails, that then becomes a fade candidate, right? And that's true with give and goes and this setup as well, right? So you have your pretty direct opportunity there to turn that fails and starts to turn to the downside. So you could be aggressive if you really like the thesis for the short here, but the secondary option would be to wait for some consolidation or break at the low. So this actually put in a bit of a double bottom and then ended up breaking later in the session after this failed to turn higher multiple times. Why can I not click this? Okay, there we go. So here would be your entry to fade into the close, and the market at this stage looked much weaker, right? So I thought the catalyst was pretty darn good. This 226 level is really big. So aside from it just being really hot into that level, I thought this could be a really nice breakout to the upside. But the price action is king, right? And this ended up setting up a fade. So objectively, that was what the playbook trade was. All right, so those are some good reviews, I would say, even though I would categorize everything as like a routine op. As for just overall market and watch list for tomorrow, we're in a really interesting spot. Okay, so and Space Monkey did a good job talking about this on stream today, how the market had been over the last 2 weeks in balance. We broke that balance at downside, and then we were flirting with getting back inside the balance area, which could lead to a squeeze to the upside. All right, this 67.64 has been a really important pivot. And a couple of people asked why that is. Well, this is the source of the 3% plus down days that we had in October and November, right? And there's, if you look even closer, there's multiple tests here. There's a test here, two tests here, one with a trap, a test earlier this week here, and then several tests intraday today, right? So this, if you ever are wondering if a level is important or not, the more times you test, like the price is going to tell you, right? This is just validating. We're not just making up levels out of thin air. This is price validating its importance, right? So 67.64 is our current pivot where we're at right now in the market. And we have PCE tomorrow. So, this was a nasty day yesterday, and we obviously gap up on CPI, have a very big recovery. So when you take a step back from yesterday's ugly close to today's high is 93 points. Okay, so market, multiple attempts to bounce before yesterday, even tested 67.64 intraday, end up failing, closing on the lows, and then recovers about 100 points. So we're still in this fight right now to try and between buyers and sellers to defend this area in the market. It's also the source of the 50-day. So the 50-day is around here as well. So it's just a really important kind of short-term pivot for the market. Overall, this is a really healthy reset. While the price action in the short term or intraday trying to trade it can be really frustrating, and today in particular I think frustrated a lot of people. This is extremely trappy. Big picture, it's resetting. It's taking time to just catch a breath. Okay, so everything to me is going to be about PCE tomorrow, and whether or not I think it's going to kind of shape the tone for the rest of the year, or the next couple weeks, okay? So if we end up selling from this spot now, 67.64 to me is much more vulnerable. If we fail there now, I think we definitely, I shouldn't say definitely with certainty, but it was very high likelihood in my opinion that we sell to 6,700 and probably lower, probably within this area of support here. If it defends or if we gap up, the next push over 6,800 it's kind of the similar conversation to 67.64. 6,800 has been would be breaking back into the balance area, and then but having held and defended major dips. So the fuel to the upside will be elevated. And you also have the Santa rally, which happens every year, the last 5 trading days of the year, plus the first 2 of the new year, is typically really good for the market. You have a lot of rotation, big funds are active, super active 401ks at the start of the year, super active. So you'll see some pretty big moves. Not always in the same spaces, but nonetheless, you will see a lot of activity. Okay, so I think tomorrow is going to be an important day. I know it's a Friday before weekend, but in my opinion, I think we're kind of it's going to be more or less a tone setter to me. So we'll see what we get. With all of that being said, to super simplify everything, below 67.64, I like puts. But back above 6,700, 68.10, to be more precise, I like calls. Okay, everything in between is a mess. All right, watch list for tomorrow. No real change in active positions, guys. Holding some MU roll-ups. Those can go to zero, doesn't matter. We'll give back about 20-30% of profit from today. Holding some Tesla. Tesla looked really good today. We'll talk about that in a sec. Well, actually, that's the first on the list, so we'll talk about that now. Tesla, impressive reaction. The momentum is obvious, very clear in the stock, even with the down day like I had yesterday. Okay, so it should react to PCE. This is kind of a classic shake and bake to me. If we gap up, it won't surprise me whatsoever if we gap right up to 500. If we gap down, then this is probably going to take longer and also risks to sell into 442, big picture. Okay, so Tesla's still very much in play. It's moving really, really well. It needs to continue to be our focus, regardless of the direction. S&P is on the watch list. Already talked about that, below 67.64. For the upside, actually like QQQ better. In case tech gets some rotation, the 613 is very defined. So watch 615 calls above 613. Micron, I'm watching both directions. So there's actually 3 trades. I have 2 on the watch list, but there's 3 trades I'm looking for. A downside candidate under 245 if the market fades for a gap fill. Okay, so 240, 250 or 240 put under 245. Secondly, would be a failed breakdown there. So if the market stays healthy and isn't selling off, but this kind of sweeps that prior day low and turns, I would like that for a trade to the upside. And then the third way would just be if we end up, gapping up big on PC or something and then break all-time highs. I think this could be a really nice breakout to the upside for the calls. All right, PLTR. Pretty nice strength. Okay, this has been a market darling now for the whole year, and it's been stuck in this consolidation sideways. I think this could get bought up pretty aggressively into the end of the year. So watch this 180. Really, this is kind of like a range, honestly, from 185. 187, 190, this whole area here. So what you have to look for is a break over this area tomorrow. If PC gaps us up, it's going to probably gap up over this anyways. So really this 190 level is key. This is a previous all-time high. I think PLTR can lead again. So watch for a break above that, depending on where we gap or don't gap tomorrow. For downside, Netflix is looking pretty bad. Okay, so Netflix under this trend line, so it's a bear pennant here set up on the daily. This one's been a little bit harder to trade, but this is from a technical standpoint really straightforward. It's super clear, right? You even trap the side, the upside, and headed lower today, respecting the trend line. So if it breaks the trend line tomorrow, or gaps below and retests and turns, something like that, 92 puts, 93 puts on watch for a trade to the downside. All right, that's what I got for you all. Hope you all have a great rest of your night. I will see you all in the room tomorrow.